Hello and welcome to my monthly update on the alternative asset management industry and the service providers and their league tables. I also will be joined as usual by an industry expert who happens to be a Convergence client. In terms of the service provider ecosystem, there are over 600 fund administrators, 500 audit firms, 300 primes, and over 1,400 custodians servicing the private markets. I am George Evans from Convergence. Convergence is a data and analytics firm focused on the asset management industry globally. With that, alternative asset management league tables are available only to Convergence clients. League tables, though, can be purchased at the Convergence e-commerce site. I will provide some commentary on the market movement we saw from February 2021 to February 22, and I'll be joined this month by Seth Deutsch of Element 78. Seth is the Chief Growth Officer of the firm. Seth is also a board member of Element 78. I also want to remind you about some exciting news we have. We expanded our league tables well beyond fund administrators and auditors this year, and we include now both a global view for both, but we've also rolled out our inaugural custodian and prime broker league tables. I would first like you all to meet Seth today, and we'll have a brief conversation about Seth's business and the things Seth thinks that make his business very different than kind of the normal client we have. And then I'm going to talk about some high-level comments on the respective league tables. As I mentioned, I would like you all to meet my guest today, Seth Deutsch. And Seth is in the great state of Illinois, the windy city of Chicago. Yeah, Seth is the Chief Growth Officer and is a board member of Element 78, a real interesting firm and a client of Convergence. Seth, how the heck are you today?
Doing fantastic. Great to see you and speak to you today.
Yeah, well, I am very happy you were able to join us today, and it's been a very exciting time for your firm. And I thought, with it being, you guys being so unique, it would be great for you to meet our audience. So this is what I thought we could do today. I wanted Seth to start with just, a brief discussion of your firm, kind of acquaint everyone with E78, Element 78, and why it's kind of a different model, right, than most firms that are out there today.
No, I appreciate it, and we're very, very proud of the firm, and I think that what makes us unique and different is our origin story. Our founders, John and Adam, came from the industry. John was the head of finance at Sterling Partners in Chicago, ran the middle office and the back office, and then he and Adam would also go into the portfolio companies to assist founder-led businesses, typically in the office of the CFO, with that initial onboarding phase, right? When private equity or an institutional investor comes into a founder-led or family-led business for the first time, there's a lot of change that goes on. Just founders being accountable to someone other than themselves and their family and their teams, but also just some of the nuances of having to do investor reporting and board reporting and having a lender in many cases for the first time. Most founder-led businesses are running on a cash basis, and they have to convert to GAAP, and they have to get the books closed in 5 days to meet the reporting requirements of their institutional investors. And this change takes a lot of founders by surprise and their teams by surprise. And so Adam and John, in addition to working within the fund, also created what they felt was the Platinum Playbook for CFOs and the leadership teams going through this transition. And so Element 78, E78, is actually the 78th element on the periodic table. It's the platinum element. So they had really created kind of the Platinum Playbook for CFOs within private equity portfolio companies going through this transition, and playing off of Sterling, playing off of the elemental factor there. That's how the company got its name. And so intentionally, right, given the operating experience of our founders and their journey to become entrepreneurs, who they themselves were dissatisfied with the types of services that they were getting, both in terms of, right, moving toward outsourcing within the fund as operators, and the types of services that were available to them as within the portfolio companies as operators. They felt it would be very unique, different, and interesting to have people from the industry service the industry. So that is the founding origin of our firm. And I think it's also, so it's unique that you have people from the industry starting a consulting and outsourcing business, right? And given their broad, diverse experience set, both operating within the fund and operating within portfolio companies, they made the intentional decision of basically creating a firm to service the office of the CFO within both funds and the portfolio companies. Not many of the other founders in the market have that same operating experience.
Right.
And so that was the genesis of E78. And fast forward 6 years later, we're now an at scale, professional service provider operating right on both sides of the private equity equation. And so I think that, and they were not trying to replicate what anyone else had done. They, as founders, they were trying to bring their expertise right to the market in a unique way. And I think that perspective of understanding where value is actually created within the private equity markets has really defined us and has led us to down a great growth trajectory. So George, all of this, but I hope that's helpful to your listeners to understand.
No, listen, it's a nice story. I mean, I was kind of thinking back as we're about to hit our, we just hit our 9th anniversary, and one of the biggest things at Convergence is being operators, having the pedigree, being from the industry. It makes a big difference in terms of view and vision, and even just receptivity in the market, right? Because people are practitioners, right? And
that's right.
How many, as you built the firm, inorganically, how many acquisitions have you done to date, Seth? Now, E78 about.
So, well, we like to call them partnerships because they are, because everyone that joined, we're a partnership, right? And everyone that joins our family here, right, becomes an owner. Founders of their own firms become owners in E78, right? So we've executed now 7 partnerships where we've brought other firms into E78. And we've been very fortunate to partner with some incredible operators, some incredible entrepreneurs who felt that they could express their purpose and realize their vision and their mission, both for themselves, for their clients, and for their employees, as being part of something larger in terms of being, and in terms of being part of something that's unique in the industry. I think the thing that is solidified and is kind of the driving force behind all of our partners and the entrepreneurs that have joined us in this collective family is that they all wanted to say yes to their clients. Mm-hmm. If their client said, can you do this for me? Can you do that for me? Can you, whether that was Vince and Nick at Agile, whose clients were asking them to act as portfolio company CFOs, right? They're like, sorry, we don't do that. We sit in this seat. So they all had this, their clients were asking them to do more. And they didn't either have the expertise, the time, the talent, or the capital to execute on all the client demand that was hitting their desk.
Well, what I've learned and what I've liked about your model, it's not for the founder to sell and take his or her check and run. It's for the founder who sees the vision and thinks that there's the power of this thing can magnify, and amplify what they've been able to build so far.
Yeah, it's amazing. One of our most recent partnerships with Catalyst, Nick and Dan, their firm who recently joined us, we cross-sold and closed and started to deliver 10 opportunities in the 2 months leading up to the closing of the transaction, right? It just shows you the power of coming together and being able to realize that growth together. Part of the other aspect that comes with that, and something that we all face, is the war for talent today, right? And that's the other reason, right? We feel that collectively we have a much greater probability of winning the war for talent together as a larger firm, together as a diversified firm with both diversified leadership, diversified customer base. But as in today's market, right, we're still a young, small, from my perspective, small entrepreneurial firm,
But nimble.
but we're now of scale, right?
Yep.
And we were able to recently bring in a new head of recruiting from an incredible firm. We were very lucky to have Lindsay join us. We've just recently brought in a COO who was with one of the largest professional services firms in the world and has chosen to join us on this journey. And so the things that we're able to bring to the founders that join us from a back office perspective is very, very powerful. And so these are the other things. It's not just a matter of being able to respond to the market need. We've got to be able to deliver the talent, right?
Yeah, and
so,
as you're successful, you're just going to continue to attract people, like you say. As you know, fund administration close to my heart. Know it, lived it a long time. And as you know, one of the phenomena out there right now is adding more services, professional services to the fund administration offering, right? I think asset managers, have vendor fatigue, right? I think if they could buy 6 things from one person, they'd rather do that than buy 6 from 6, right? What are you seeing as the lineup of services these days that you guys think about? You'd like to kind of surround fund administration with, and
sure.
And what are you looking at for our audience today?
Yeah, so we've always taken a holistic view to our clients, right? And again, we focus on the office of the CFO, and we say the same thing in within funds as we do within portfolio companies. You'd be amazed. Especially, we play to the mid-market, right? So you'd be amazed at the amount of things and the volume of requests that hit the CFO's desk, right? So everything from washing the dishes and turning the lights out at night, right? To chief dishwasher, but anything from around tax, compliance, valuation, IT services, recruiting, right? All of these things tend to hit the desk of the office of the CFO within a private equity firm, especially in our core market, which are funds that tend to have $1 billion of assets per fund and below, right? Operating partners, right? The board searches, all of these things hit the desk of our clients. And it's the same thing within our portfolio companies, right? Within the portfolio companies, within the office of the CFO, whether it's controllers, FP&A, outsourced accounting, outsourced procurement, outsourced IT, outsourced HR, all of these things tend to cross the CFO's desk. And so on the fund solution side of the business, we're building out a stack of professional services and outsourcing solutions to help the partners at these funds focused on core value creation and rely on us to help them with everything else that enables them to have an efficient operation so that they can focus on MOIC and IRR. Yeah. Right? That is the job, right? Like, I think, right. And again, us as operators, right, we understand, we're serving our private equity clients on both sides of the equation. Value is created with your portfolio companies in the market, right? So we want to free up our clients to spend as much time helping the founders that they have backed execute to deliver returns for the leadership teams and for their investors. And so anything that can be outsourced within the office of the CFO, we want to be there to support them so that they can spend our clients can spend all of their time on value creation. So that's how we think about it.
Yeah, it's interesting because I think, some admins are following suit, but a lot are very piecemeal. And one of the things I've seen, as I think is really a good way to look at it, is the office of the CFO and that holistic approach. Now, because of that, right, you're gonna kiss a lot of frogs, right? And what I wanted to kind of get a quick sense for you is I don't know what the latest numbers I've seen, but when something goes to LOI, it may be 1 out of 6 or 1 out of 8, right? Closes. Curious what you've seen as the biggest challenges, right? As you get to the table, and now this moment of reality hits those founders, right?
Sure.
What have you found to be the biggest challenges to get people kind of over that goal line?
Yeah, I can speak to it generally, and then I can speak to it specifically, right? I think that I think the market generally has awakened. It's actually interesting. I think there's a renaissance in investing in professional services firms within private equity generally. Now, fund administration has been going through consolidation for a long, long time, right? But as the markets within private equity have tightened up, as there is more private equity coming in, right, that's available in the market, more and more funds, harder to find good assets, and professional services and outsourcing has great cash flow dynamics. So we're seeing more people become interested in our space, yep. Right? So it's hard for founders as they're getting all of this interest to really think about who do they want to partner with. So I always come back to who we are. We are operators and founders and entrepreneurs at heart, right? We're good people. We do the right thing. We say what we're going to do. We're very client-centric and employee-centric. And so for us, the biggest thing is getting to know the founder, right, during a deal process. And there's a lot of competition now, right? We've been very lucky. We participate in processes, but every single one of our partnerships has been sole sourced by us. Some of these relationships we've developed over years. Some of them we've developed over months. For us, it's really part of the reason that we're selective and we have a very high close rate is that we spend a lot of time getting to know the founder, or that founding team, getting to know their employees, understanding their culture, and making sure that we're going to have strong cultural alignment. And so I think this is when you do that, and when you have the luxury, as we do, because we're also growing significantly organically, yep. Right? And so we can be selective. You can never, there has to be great chemistry, shared values, shared vision. There has to be a reason beyond the monetary value of a transaction and the monetary value that we can build together over time as one firm.
Yeah.
We've already had. Oh, go ahead, George. Sorry.
How I always thought about it, Seth, was it's like that they still have to think the journey's not over.
It's not. Right. With us, right, the journey continues. Everyone still owns a portion of the firm. We just returned, right? We had a major recapitalization event. So, we're just executing our next chapter. We had a fabulous private equity sponsor for the first portion of our journey. We are blessed and lucky and fortunate to have an incredible sponsor with us on this portion of our journey. But I think that we spend a lot of time really getting to know the founders, understanding seller motivation and founder motivation, and what is it that they're really looking for. and we spend a lot of time getting to know their teams. They spend a lot of time getting to know our teams. They spend a lot of time getting to know our founders, because it's a life-changing event, right?
Yeah.
These founders have built these incredible businesses, and this is the one time that they're going to make this life-changing, life-altering decision, not only for them, but for every single one of their employees. And those employees tend to be the primary breadwinners within their families. So you think about the number of people that you're impacting in this decision. We as founders are very cognizant of that.
Yes.
And so that's why we spend so much time really getting to know and understand the people that we partner with, and understanding what they're looking for in the next phase of their entrepreneurial journey. It's why we're very selective, but it's also why we have a very high success rate, once we form that covalent bond, going back to our brand, right? On the periodic table. But that's what this is not transactional. This is very serious for us. We know it's very serious for the founders. And so George, you've heard me say this. I'll say it again for your audience, especially since we are in the midst of March Madness. We play John Wooden ball here. John Wooden didn't study game film of competition. Coach Wooden, and I started my career as a basketball coach. Coach Wooden always preached, become the best version of yourself, right? If you focus on that, right, then you're controlling the things that you can control, and you're focused on maximizing your potential. That's what we focus on. So I can't speak to what others are doing. I can only speak to what we do.
Yeah.
And I think because of this focus on culture and shared alignment and shared vision, and this family of entrepreneurship that we're building, we find the right people. And that's why we have a very good success rate.
Yeah, well, listen, it's a nice story. Last thing for you, Smith, just briefly, your thoughts on 22, right? Here we are sitting in March. What's the outlook for 22 for the firm?
I feel very good about our outlook as a firm. Obviously, we're in the midst of lots of things happening in the world. What I would say is I spent a lot of my time as an executive in blue collar industries, which private equity is a major investor in. And in those industries, and in our own firm, we say that things go wrong all the time, right? And they happen for three reasons: something I did, something you did, or an act of God. 2/3 of the time, if something goes wrong, if we assume a normal distribution, it's got nothing to do with anything that you did, but you have to prepare for these outcomes. So we're very cognizant about how we structure our business to make sure that no matter what happens, we're going to achieve our goals. The thing that we love about private equity, and the reason that we're so focused on private equity specifically as our end market, George, is that we consider it a no cycle industry. And that doesn't mean that there's not cyclicality within the things that private equity invests in. But what it means is that private equity firms, by their nature, have to deploy capital to stay in business.
Right.
And so through all economic cycles, they will deploy capital. And that creates a need for the services that we provide in the office of the CFO. So what we do is we stay very, very focused on the private equity industries. We stay very, very focused on the mid-market, where there's still massive opportunity. And the mid-market has attracted a lot of investment, and there's still a lot of dry powder to deploy. But, to achieve the things that our clients are trying to achieve, they need a lot of help. And we're very fortunate that they choose us, and that we're able to help private equity funds and the leadership teams that they back in achieving their mission. And we just don't see it slowing down, because there's still massive value creation to be had in the mid-market and lower mid-market. And we simply do not see any slowdown in the need for value creation.
Well, listen, you lead, right? And an old saying, you lead from a position of strength. And I think you guys are in a really nice spot going into this year. And so, listen, I want to thank you for joining me today. And I also want to thank you for the great partnership you have with Convergence. You've been a great client and someone we've enjoyed spending time with. So, appreciate you making the time for this today.
Anytime for you, George. Much appreciated.
All right, I appreciate it. All right, thank you, Seth. And let me now turn to just some brief comments on the league tables. And I'll start with fund administrators. And I'm going to talk about assets today. So over the past year, February 21 to 22, we saw assets grow about 13.6%. And what I spend time on is the distribution of those assets amongst the administrators. So we saw administrators 1 through 5 pretty close to about 15.5%. So certainly did a little better than the market, 2% better than the market growth. I think what's really interesting though is administrators 6 to 10 grew at 28.1%. So almost double the market. And then when you look at administrators ranked 11 to 25, they grew over 20%. So almost 50% better than the market. So while there's excellent distribution, we are seeing firms pushing business really to administrators 6 to 25, right? A little more heavily than 1 to 5. And then I also always like to remind people there is still about 12% of that new market, that new growth, is still self-administered and went to a self-administered model. On the audit front, we also saw that same growth, 13.6%. And let me talk to you about that distribution. We saw auditors 1 to 4, the big four, grow at about 14.6%. So about 1% higher than the market growth. We saw auditors 5 to 10, though, grow at 18%. And we saw auditors 11 to 25 grow at 25.5%. So close to double the market. So the same phenomenon, right? Steady distribution across all three tranches. But higher distribution in auditors 5 to 25. When I go to custodians, we saw assets in the custodian market grow at about 15%. And when you look at the top 10 custodians, they grew at about 14.6. So very close to market growth, stayed even with market growth. And custodians 11 to 25 grew a little over 15%, 15.5. All other custodians, though, so 26 on, grew at about 18%. So again, pretty equal distribution, not as disparate as you see in the admin and the audit world. And then lastly, I want to talk about prime brokers. And we do look at prime broker growth on a fund perspective. So that market grew at a little over 13%. We saw brokers, PBs 1 to 10 grow at close to 15%, and prime brokers 11 to 25 grow at about 9%. And all other primes were fairly flat. So little different story here. Most going to the top 10 primes. So we will look at this every month. We'll look at some insights, but I want to thank Seth for joining us. I want to thank you all for joining us for our monthly review of the league tables. It's going to be an exciting 2022. We look forward to all of you being part of our monthly podcast. Have a great day.